This is a traditional investment fund. And this is a tokenized investment fund. For what concerns the financial and even sustainable objectives, these two funds, or these two types of funds, perform exactly in the same way. It is like comparing a vinyl to an MP4. The music is exactly the same, but the MP4 is more easily shared with your friends. In this video, we packed the latest intelligence and the take from regulators on the tokenization of investment funds. And we will also see how tokenization of investment funds can help fund distribution. Before we talk into details about the topic of today's video, it makes sense to debunk the first myth, which is, are tokenized investment funds per se crypto funds? The answer is no. A tokenized investment fund can invest in any type of underlying asset, including the more traditional ones. A tokenized investment fund can also invest in crypto assets, and when it does so, it has to be considered as a crypto fund. So not all tokenized funds are in essence crypto funds. This helps us also to clear another question, which is relative to the regulatory treatment of tokenized investment funds. The fact that a UCITS might be tokenized, for instance, doesn't change the nature of that fund of being a UCITS. Accordingly, it has to be regulated under the UCITS directive. This seems to be the main take adopted by regulators across Europe. There is a first phase of tokenization of investment funds that seems to be a reality these days. This is the case of having digitalized the portion of the mechanism related to acquiring a participation into an investment fund. In essence, when an investor wants to subscribe into a fund, the administrator of the fund creates a digital wallet and issues a token to be stored in that wallet and to be available in that wallet that represents the participation of the investor in the fund. At this point, you may think, well, Attilio, this is a little bit futuristic. We don't really have funds of this type. In reality, we have already in the US and in Europe tokenized investment funds where the participation of investor in the fund is represented by a token. And this possibility has also been blessed, for instance, by regulators in Luxembourg, which is one of the member states in Europe with the highest standard for what concerns the investment fund industry. For us to understand the benefits of tokenization of investment funds, of course, we have to look at understanding the distributed ledger technologies that are employed for what concerns the dynamic and the mechanisms that govern acquiring a participation into a fund. And for us to understand how this distributed ledger technology work in practice, we need to compare them with the centralized ledger approach which exists nowadays. If we look at a fund, we know that there is an administrator, that there is a transfer agent, and that there is also a distributor. Each of these entities interact with each other, and each of them has a central ledger where they record information on the investors. These ledgers need to be reconciled multiple times in the lifetime of an investment fund, creating burdens, lags, you name it. With the advent of the distributed ledger technologies, all this could be streamlined in different ways. On the one hand, the distributed ledger technologies will help because there is not going to be any longer a central entity that holds a ledger, and if that fails, the whole system fails, if you like. But there will be ledgers represented by computers or machines that are distributed geographically by entities on the chain, and that verify, authenticate, and record the same information all at the same time. In essence, the distributed ledger technologies will help not only with the reconciliation, but also with the dynamics of distribution, because an investor will no longer need to go through one of the entities to participate in the fund market, but could join the chain itself and basically acquire a participation from another investor or sell its own participation directly on the chain. There is an effect of disintermediation that comes with the adoption of the distributed ledger technology. This will, of course, open new avenues for fund distribution, new secondary markets, and it springs to mind that it will help, for instance, the long-term investment funds, which nowadays have concerns of liquidity and for which there isn't really a secondary market that has been developed so far. We need to, of course, look also at the downsides, at the risks that come with the adoption of this distributed ledger technology. We have some known unknowns in this case, for instance, for what concerns the effect of future regulation, because this is a very new industry and we don't know whether there will be in the future new regulation on data privacy which will change the way that investors could participate to these chains. There is already another risk on the list, which is one of perception and trust, because the most known DLT is the blockchain, and blockchain is intimately, or was intimately, connected to the Bitcoin as a cryptocurrency. We have seen that in the industry the narrative of blockchain has been divorced already from the one on cryptocurrency, and also regulators are looking at the upsides and the advantages that can come with adopting DLTs without thinking of the Bitcoin anymore. Nevertheless, these structures are new. There is no funding per se to the development of these chains, which is left to this, let's call them enthusiasts that work on the chain themselves. And it is possible that an increased use of this chain might result into issues of hacking, but also into technical issues for the chains themselves, which could then have some ripple effects in terms of investors losing trust into these structures. As we did mention, today we have a phase one of tokenization of investment funds, which refers to how investors can acquire a participation into a fund, and we saw that it's not really futuristic, but there are already examples, for instance in the US, of money market funds where the participation is represented by a digital token. The real game changer will be when DLTs will be adopted in what we define the second stage or phase two of the tokenization, where basically the investment fund itself will use the same process to acquire its underlying assets. And this is where we will see the goals that the industry is aiming at in terms of the settlement window for securities trading of T+0 might become a reality. If you got to this stage of this video, I wanted to remind you to subscribe to the channel, like the video. Your engagement is helping us a lot. There is more to come on digitalization and European regulation. Thank you for watching. Stay tuned.